Last Friday, July 11, the volcano that had been suppressed by silver for many years finally erupted. We know that after silver entered the US market, both spot silver and futures silver have skyrocketed. It has reached a new high in 14 years. Spot silver peaked at $38.41 an ounce. It was up 3.7% on the day. It has reached a new high since September 2011. Then futures silver is breaking through $39. The increase on the day was 4.3%. That is to say, the cumulative increase since the beginning of the year has reached 30%. More than 26% of gold. So what is the core logic behind this skyrocketing silver? One of the wild swings in the silver market is not just a speculation. It's a physical run on a highly leveraged financial system. So the leverage is 250 to 400 times. That is to say, 1 ounce of physical silver corresponds to 250 to 400 ounces of paper silver. And the second reason is that its rental rate has soared. The 1-month rental rate for London silver skyrocketed from the normal 0.5% to 4.5%. Then it is similar to the signal at the time of the gold run in February 2025, including February 2024. The third is that the inventory is too tight. The total stock of the system in London is 500 million ounces, but only 7.5 million ounces can flow. That means it's only worth over $300 million. That volume is so small. The liquidity of the market must have dried up. Then what about the fourth one? That is a price difference between futures and spot is out of control. New York, period, under normal circumstances. Goods and London futures. The silver spread should be within $20, but on July 11th, it had a spread of $50. That is to say, if the price difference between spot and futures continues to widen, then the London inventory may accelerate the flow to this inventory in New York. It triggered a much larger liquidity crisis. So if we look at the long-term trend, global dollarization has fueled the rise in precious metals, including the central bank's purchase of gold and this private holding, and this Asian ETF, and this demand for food has exploded. In this case, this further allowed the London stock to flow to the New York gold stock. And in the meantime, silver is up. Why is that? Because the gold-silver ratio repaired the previous one. Originally, the gold-silver ratio was more than 80%, but now it's back below 70%. Then the gold-silver ratio will be repaired. At the same time, this silver industrial attribute, including photovoltaics and chips, superimposed with financial attributes, then it became a new focus. Therefore, it led to a sharp increase in silver in this round.